Major indices seeing weekly gains as the U.S. economy added 222,000 jobs in June, blowing out expectations. The Federal Reserve also signaling to Congress that further rate hikes are on the way. Here now to discuss all of this and what it means for the markets going forward is S&P Equity Chief Investment Officer Erin Gibbs. Erin, first of all, what did you see in the jobs report today that stuck out to you besides that headline number that was huge?
Yeah, so one, that's 25% higher than expectations.
Huge.
Just to give you an idea of just how big of a beat it is. But there were 4 positives, including that. The other 2 are, one, labor participation went up, so that's good. We're seeing more people enter the job market. We also saw some increase in healthcare, which was also nice. We saw a lot of jobs added there. And we also saw some positive revisions from April and May in the positive months. So those are the positives. The negative is the wage growth.
Yeah.
It's just not happening. It's flat.
Why do you think that is?
And that's the big conundrum that we all are, is all these people are coming into the market. It's a tight labor market. We're at some of the lowest unemployment we've ever seen. And why aren't we seeing wage growth? And we think a lot of it has to do with productivity. People are just becoming more productive, more technology, and that's keeping the wages down. And that's the one big question that's going to keep everybody guessing whether the next rate hike comes in September or December, because it's all about that wage growth.
So I'm so surprised about that, because when I talk to bank executives, you know, even on the sidelines, not on the air, they're talking about how they're struggling to keep tellers. You know, that's a job where you've trained someone, you need someone good, you need someone reliable, that you can, you don't need a college degree.
Yep.
But this is something where they say they're fighting over people, they're having to give them raises. So I don't understand why that's not being reflected more in the wage growth.
Yeah, I mean, we're talking 4.4% unemployment. I mean, that's I don't want all-time low. And part of it is there are more people coming to the job market, but there are definitely employees are having a harder time finding employees. The trouble is, there's just so much pressure on profits. It's hard to give those wage increases because you have to compete, particularly in the retail sector. That's 2/3 of our economy. Amazon has changed things, and so it's tough to be able to give people those wage increases.
Yeah. I was also looking at a study that was coming out of the West Coast where they were saying in Seattle, you know, when they raised the minimum wage, that the average worker was taking home $125 less per paycheck as a result of the wage increase, that it had gone up, but they were cutting hours, which is what people predicted.
Yeah. The one good thing, another good thing in this report is also hours have gone up, and they also revised up from the prior month. So things are in place for it. I think this is true across the board, but I think it's just taking longer than we expected to really see that wage growth. Eventually, something's going to have to click, and we are going to see it, but it just hasn't happened yet.
Yeah. What do you think the Fed does from here?
So right now, because the wage growth was so low, I'm still hesitant about whether they're going to raise in September. Definitely either September or December, one of the two. But I'm sort of 50-50 on whether it happens September or December.
Okay, we'll see. Thank you. Thanks for your forecast.